What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a raw price action analysis for COMS Sovereign Holding, ticker symbol COMS. Before we get started, please make sure to subscribe to the channel and like the video. Share the video with a friend so we can get retail to learn something, right? I appreciate those of you who are sharing the video on Twitter, on Discord, on YouTube. I really mean well for you guys, so please bring as many as you can before they cut me out, right? Anyway, you guys, let's go ahead and get this started. Okay, so we're gonna start on the weekly chart for COMS. Let's see. So we've been trading since 2014. Okay, and we've hit a pretty low level down here. The weekly chart is not something that I'm gonna devote a lot of time into. I just wanted to touch on a couple details for you guys. So we did get a massive inverted hammer candle print on the weekly, which could carry some weight. And I imagine that this is potentially the workings of the CEO purchasing, I think it was a 25 million shares. I'm not too into the fundamentals of this company. This is actually a request, so I'm gonna fulfill that as best as I can for this for this person. He's a really good guy, good friend. Anyway, so the next weekly candle is due to close in about 14 hours, and this candle would essentially be the confirmation for an upside trend. Usually these hammer candles, when they print at the bottom of a downtrend, they signal a potential reversal in trend. So let's go ahead and move on to the daily chart, because that's where some juicy things are happening. Okay, so let me just make sure the notes are right in place. Sorry, you guys. Okay, so we have a gap, and we're actually holding at the support of that gap range. The gap range is 4 cents to 6 cents. To be perfectly clear, it's actually 4 cents as in 471 and 6 cents as in 630. And we're trading below the SMA 10. And this indecision candle closed below the 10-day simple moving average, which could be a confirmation for a continuation to the downside. Now, these gaps are typically something that people say we have to fill, but these gaps don't actually have to be filled. We can trade on forever and never come back and fill these gaps. So please don't fall under that belief. That is false. Let's see the notes. Okay, so let's go ahead and move on to the next chart here. Okay, so we are in potentially two different formations now that we're getting into tighter time frames. This is the 8-hour. We're potentially in a descending channel here. Now, this channel can be confirmed with at least 2 touches of both the resistance and support. So we have gotten the 2 for support, and we actually have multiple touches on the resistance. Now, if you follow my analysis threads, or if you followed before, you know that I talk about the golden rule of 3 pretty often. So we're looking at test number 1 here, test number 2, and test number 3. Now, the reason why I say golden rule of 3 is because after 3 tests of your resistance in a bullish trend, the channel signals a trend reversal all by its own. So by itself, sorry. So after the 3rd test of resistance, an accumulation period, if you will, would begin, followed by some sideways price action. So at the very bottom of this trend, we actually rocket shipped to make a break on the fourth test, which is typical. And as you can see on this candle here, we actually did use the resistance of this channel as we validated that resistance and retraced, followed by breaking out again. So now, usually when we break out on the 4th attempt, we then start to come back to test our newly converted resistance into support. And you can see here that we did have a 8-hour candle here that rejected right at the support line here of this channel. And you can see here that we wicked down and recovered right up to that line as well. So we were actually trying to confirm this as a new support before continuing on to the upside. However, we didn't. And the reason why I drew this second formation, which is a descending broadening wedge, is because of this failure of this test. These formations tend to realize pretty often. So I was curious as to why this formation was failing the newly converted resistance into support. So the potential of us failing it could be because of this wedge. So following the golden rule of 3, we have only tested the falling wedge 3 times. So we have test number 1, test number 2 of resistance, and the test number 3. Usually number 3 is a pretty impulsive attempt to a breakout, but it usually fails. So follow me, you guys. Okay, there's a few things right here. This is raw price action. I'm only giving you these aren't statistical measures. So this is just what I studied in just reviewing tons of charts, right? So we get that impulsive move in the third iteration. So we're coming back to test now the newly converted resistance into support of the wedge itself, and we've used it one time already, and it looks like we actually dead cat bounced here. And now if I zoom in actually to that very last candle that we're currently on, you can see that we're using this as a support currently. Now, psychology suggests that when we have a breakout in the third iteration, we are likely to fail and to come back into accumulation period. Similarly to the 1, 2, 3. Similarly to this, where we failed the third and we came back to accumulation before a run to the upside. Now, I have a feeling that this descending broadening wedge needs to realize its true breakout with a 4th test and not with the 3rd test. So this is likely to fall and then recover and break out of both formations and test both of the newly converted resistance into supports. Another reason is the gap itself. So the gap being so close to us, we might as well just cover the gap and then continue trading up to the upside. So that is a potential. And this, the reason I am speaking to you in potentials is because this is raw price action, and usually raw price action is discretionary. If you've noticed on my header, I say that I'm part discretionary, mostly systematic. You know what I mean? So mostly systematic is because I play my strategy within a system-based, statistically backed metric. So I'm not using stats here. I'm using raw price action. So looking at this price action, this candle has nothing bullish of it, and it is an 8-hour print, and it almost hasn't even returned almost anything of what it's lost. It barely returned anything. So this is suggesting a continuation to the downside, likely to reclaim the broadening descending wedge, cover this gap, and then attempt for another breakout. We could potentially use this as a resistance so that we can come back and confirm our newly converted resistance into support of the wedge before breaking out again out of the descending channel, and then continuing to test this newly converted resistance into support before a continuation to the upside. This can likely take days to realize, you guys. I know that there is a positive catalyst in the works, so that's also a potential for us. Now, the reason Now there's another potential here. So if we look at this in a larger time frame, so if we go into maybe let me just explore right here, you guys. Let's look at the buy daily and see. Just take a look at something here. Maybe the daily. Let's see. What I'm trying to find is a larger is a larger candle structure to see if there is within the channel something that like for example this in the weekly structure, the candle that we were just talking about right now has you know, it has found support right at the top of our gap. There is a potential to where this can close. What I'm trying to look. I'm sorry, I'm stuttering, you guys. I'm looking for a candle that hasn't closed within the channel, and this is one. But 14 hours seems a little short in time. The fact that we're gonna close the candle above above this low and this low here could serve as an indication to a continuation to the upside, right? But it looks like we're not going to be able to get that. Let's go ahead and move on to the next point of what I wanted to show you guys. Okay, so now another reason that I am sticking to my guns about potentially retracing and touching back down into the bottom area of this gap and closing it. Actually, we do have. Let's see here. We can move this out of the way, and yeah, we actually have to go to the 12-hour to see this gap. There we go. Okay, so here's one more reason, you guys. I took an inverse fib. What I mean by inverse is that I took the Fibonacci retracement tool and used it inversely to how you would typically use it. So I took it from the last 2 days worth of price action. So from the current lows to the current to the 2 days ago high, which was let's see, right about here, right? So the reason I'm saying inverse is because it actually draws to the bottom rather than to the top. So if I take that range, I can actually take the Fibonacci like this, and you'll see that it starts moving up rather than down. So yeah, this is why it's printing towards the bottom, so that I can be able to see what targets are in the scope. Okay, so and there is a very relevant, important target that we have to keep an eye on. So the bottom of this support is suggesting. Can't really see that. So it's suggesting about 5 cents, 5.52. The one spot, 618, golden ratio or golden mean. This is nature at its best. Is landing also at 5 cents, 5.35. So this has direct confluence with this support here. So this is very, very likely that we would go and touch that golden mean. Okay, so that is it for this chart. Let me go ahead and move on to the next chart so we can touch on some more details. Okay, so we're looking at the 12-hour chart right here, and I pulled it up because there is this signals that someone knew something about, I don't know, whatever. So these small ticks are the reason why I trade the way I do. What you're looking at here, all these green bars that I've drawn here, these are multiple drives of bullish divergence printing on a 12-hour period. So I mean, we're looking at so many drives and then an explosive move. I understand the CEO bought 25 million shares. I get it. Or I'm not sure if it was 25 million shares or if it was $25 million worth of shares. Please excuse my my lack of knowledge in the fundamental space of this company. My fundamental analysts, please correct me. Let me know in the comments down below what you guys are hearing or that I'm incorrect on. So yeah, you guys, I'm noticing here that there were multiple signals of an incoming huge move to the upside, and this is like proof that it was, So also these are the gaps that could potentially be closed up. So the 12-hour time frame in the RSI is suggesting a continuation to the downside, and we are trading below the moving average, which is this line right here. Now, for my regular viewers, I apologize, but I do have to explain this for my new viewers. New viewers, please listen. This is a regular RSI setup. I have split the RSI into two halves. So the bottom half is, excuse me here, let me just go ahead and bring that up one more time. The bottom half is the bearish control zone, and I have split both halves into two as well. So this upper half of the bearish control zone is the bear weakness percentile. The bottom half is the bear strength percentile. Now, inversely, we do have in the bullish control zone, we have the bull weakness percentile and the bull strength percentile right over here. So whenever we're trading within the shallow areas of either zones, we're more than likely gonna, be I guess you can say influenced to go back into one another. Unless we start getting into the deeper areas, then we can gravitate towards the strength of either sides. Now, in this particular instance, the 12-hour RSI, we are within, I would say, yeah, it looks pretty deep here, right, guys? It's deep enough to consider that we are entering bear strength soonish, and the moving average is within the shallow areas of the bull weakness. So this is likely to come down, and this is actually validating some of our temporary pullback or downside thesis. So let's look at a few other time frames just so we can get a bias and direction, you guys. I'm going to pull up a multi-pane right here so we can get the RSI in a few time frames so that you guys can get a better picture of what's actually happening, right? So let's start with the immediate term time frame. This is going to be the 30-minute RSI. Okay, so the 30-minute RSI does have a weak downside pivot. However, it is in the oversold percentile, and the moving average is above us, so this is bearish. We're still suggesting a continuation to the downside in the immediate short term. 15-minute could be a micro time frame, also the same case as the 30-minute. Let's look at the buy hourly and see what's in that picture. Buy hourly is now crossing into the bearish into the bear strength percentile, suggesting a continuation to the downside. So we're looking at downside almost immediately, you guys. Let's look at the 6-hour RSI and see what we got. So the 6-hour RSI is now in the very, very deep zones of the bear weakness percentile. We're very likely going to step into the bear weakness. The bear strength percentile down here. We're also trading below the moving average. So this is definitely bearish. Let's look at the 8-hour and see what we got. 8-hour is now approaching similar situation, you guys. It's approaching the deep areas of the bear weakness percentile. We're likely going to enter bear strength. Let's look at the 12-hour. We already looked at the 12-hour. Let's look at the daily and see what it's suggesting. Okay, so moving average is starting to curve. Let me make it a little larger. You can see that the curve is starting to happen like this. We are likely going to make the RSI signal line cross below the moving average, which is bearish, and we are within the bullish control zone, particularly in bear weakness. I guess we can look at the buy daily and the 3-day as well. So yeah, buy daily is suggesting a continuation to the downside, about to enter the bear strength percentile. 3-day in bear strength and potentially going to cross as well. 5-day. Okay, so yeah, we're looking at some bearish action for COSM almost immediately, and also for the following days, which backs our thesis about covering these gaps to the downside. So we do have this gap here and also this gap. So if I were to, okay, first of all, guys, I'm not a financial advisor. I actually can't suggest for you to buy or sell any asset. Please take whatever I do say in these videos as a form of entertainment. Do your own DD, right? And everything will be copacetic. Okay, yeah, we have both of these gaps that are likely to be filled in the coming days, based on raw price action, right, you guys? We could potentially use the bottom of the channel as a support before recovery. Remember, guys, this is also relevant here too. And the fact that our 236 fib has, let's draw a trend line here, and the fact that our 236 fib has a touch right here with our channel support, could potentially show us that maybe by November 10th we can touch the bottom of this area before attempting to recover. Anyway, you guys, that's going to do it for COSM. Please make sure to reach out to me on Twitter, on Discord. I'm going to leave the links at the bottom so that you guys can be able to reach out to me and discuss further this analysis, right? But with that said, I will catch you at the bell. Adios.